course, we're going to kick things off with a big committee move. This is Bryn throwing in the towel, so to speak, on Salesforce ahead of the earnings report after the closing bell today. You're not even going to wait to see what happens. Bryn, why are you getting out?
Yeah, well, so I mentioned this on Monday. I've been in this stock for a minute, probably a quarter and a half. And I feel like when the market goes up, it doesn't go up. When the market goes down, it goes down slightly. I feel they're going to have very solid numbers, good free cash flow. We'll hear about some of their new customers. But ultimately, what makes a stock go higher? There's more buyers than sellers. And I feel that Salesforce right now, from a stock perspective, is stuck in the mud. And so I just don't think that we're going to hear tonight anything revelatory that's happening. I just feel like it's a moment in time, and people are not wanting to, put more capital in this name. So I didn't want to sit through earnings in case the market has a negative feedback, which it's done on a bunch of stocks that actually had good numbers. So I just, I wanted to sell before the earnings call tonight.
All right, Bryn, so an interesting move here to not wait for any kind of validation one way or the other. I mean, you could be right about this or you could be wrong about it. But Jim Lebenthal, maybe I'll go to you about this first. If you were an investor like Bryn, we just heard got the sales call in there for Salesforce, what exactly would make you as an investor want to get out ahead of understanding maybe what could be a catalyzing factor to the upside for a stock like Salesforce, even though it has underperformed? Maybe it gets a pop because something does get said that reinforces that positive narrative.
Well, Dom, first off, let me say I completely understand Bryn's point of view. I really do. I mean, it's like, why fight this hard for a stock? And as much as I'm asking that rhetorically, I'm asking it myself with a very similar stock, Adobe, which will report next week. But whatever Salesforce does in the after hours and tomorrow will probably be echoed by Adobe as well. And basically what we have here, and I'm staying with it for now, and the reason that I'm doing it is because there is a strong disconnect between the operational results at Adobe and how the share price responds. Now, I think Bryn phrased it excellently, more sellers than buyers. That's been the case with both of these stocks and many in the software space. But what I have found, just being a long-term investor over periods of time, there are periods of times where the fundamentals disconnect from the share price, and if you believe the fundamentals are going to stay intact, which I do, then you'd want to be there for the rebound. I don't have a strong opinion on what Salesforce is going to do tonight because I don't know the name as well as Adobe, but they're both facing the same seemingly existential threat from artificial intelligence, both in terms of usurping the business and reducing the number of seats that actually use those products. But to date, it just hasn't happened. It shows up that the results are better than expected. It's what I expect will be in both names.
Bryn, how do you respond? You just heard Jim's thought about this. Exactly. I mean, does he have it right, I guess is the point.
Yeah, I mean, I think we're both right here. I think he's frustrated with Adobe for similar reasons. But I will say one thing on Salesforce, what I thought was peculiar. So I could be wrong, but I believe OpenAI powers Einstein. And so I thought that was very peculiar that Mark Benioff goes and tweets about Gemini when I believe Salesforce works with OpenAI. So to me, I felt like that was bizarre. And maybe they shifted that, but I know originally Einstein, I believe, was powered by like the ChatGPT version. And so to me, that was also peculiar and another sign of like, well, aren't you supporting the underlying technology that's supposed to be working using all these agents? I just think at the end of the day, what's given me direction is the stock price. I don't need to wait to get confirmation. The market is telling me it's not doing anything, by the way. I hope they have great numbers and it's up 20%. That's great. Right. But I mean, to me, the stock price is telling me what's happening.
I agree with you. We both may be right, and you haven't been in it for long. So I actually applaud you for getting out and not being, stuck with it. I will say for somebody like me with Adobe who is in it and staying in it, you're reminded of what happened to Salesforce in 2022 and then the rebound into 2023, which was pretty gigantic. And this isn't at Bryn. This is just for everybody who's watching that sometimes we stick with these stocks where the fundamentals are better than the share price would otherwise say because the rebound is imminent.
All right, Joe, what do you think?
Based on the strategy that I utilize to take positions in the market, I'm on Team Bryn for this one. While I'm speaking, if you could show up a 52-week chart of the IGV, which is software, you're going to see it's basically flat. It's unchanged over the last 52 weeks. The other side of that, pull up the SMH. That's up probably somewhere, if I'm correct, around 45 to 46%. So yes, we own software names in the ETF. We've been reducing our holdings throughout 2025. The remaining names that we have, they don't look good, except maybe a Palantir, which is pulled back. We have Workday, we have ServiceNow, we have Fortinet, we have DocuSign. They're all underperforming. You could cite a variety of different reasons. There was clearly, coming into the second half of the year, questions surrounding software valuations. Did software valuations reach an extreme? And secondarily, there is the constant chatter from the Trump administration surrounding restrictions on exports of products, technology products, that are using U.S. software. And that has had a negative effect on all of these software names, in particular in the current quarter.
Well, it's interesting as well because you can use momentum as a proxy for sentiment, and that kind of makes the point that you and Bryn are both making about this. Speaking of one of those names that's momentum tied, it's another cloud name. And Stephanie, I'm going to go to you for this one because Snowflake is also on deck coming up here. So let's talk a little bit about the setup here. We're up 1.5% on the shares going into this particular print so far today. What is there to like or not like or anticipate from Snowflake?
Yeah, and I would just start by saying this company has growth, real growth, product revenue growth of 29 to 30%. They probably have to beat it for the stock to do well because the stock's up 70% on the year, but they're in the right part of software. Whereas I would say that Salesforce and Adobe are expensive for the growth that you're getting. So Snowflake is expensive, don't get me wrong, and I'm nervous about it. However, as I mentioned, they not only have the growth, but they also have the operating margin opportunity. Last year at this time, it was low single digits operating margins. They could do 9-10% operating margins this quarter. I think the whisper might even be a little bit higher, but I see a trajectory of them getting to mid-teens. And so I think you're going to, if you have the top line and you got the margins, you're going to get the operating leverage on the bottom line. All of this being said, Dom, they actually pre-announced on October 27th. So I really don't think they're going to have that much in terms of new news. But to the extent that they could surprise us on the margin side or surprise us on the product revenue side, I'll feel good about it. But this is one name that I think is a very big beneficiary from all of the data that has been created and needs to be cleaned for the companies in data centers and in AI to work.
You've done a great job with Snowflake, hands down.
Well, and not easy.
Well, that's exactly what I wanted to say, is because there was a point in time, basically a 3-year period, where it was just stuck. And you stuck with it because you had the conviction, you did the work, you did the analysis.
Thanks, Chuck.
Frankly, that's what I see in Adobe. I may well be wrong, all right? I'm not, and everybody listening, I'm not right all the time. We all know that. This business of predicting the future has error in it. All that said, you know, Adobe at 15 times earnings, it's got a 14% projected growth rate, which it has exceeded over the past few years. Buying back shares, very clean balance sheet. I'm comfortable with the valuation.
It's cheaper than Salesforce, and it has a little bit better growth. But, I mean, I just think that there's other technology names in general that are more attractive that have better growth.